If you're even casually in the housing market, you've certainly heard about interest rates rising, and there is no doubt that they have. In fact, it's been a pretty sharp move. In just a handful of months, the 30-year fixed has gone from the high 2s to the low to mid 4s. And this kind of increase is even more impactful in such a high-cost area like the one we live in. But with all that in mind, it is important to have some perspective. Although elevated from the all-time lows we saw last year, mortgage rates are still very low historically speaking. And this chart does a great job of illustrating where we are big picture. Since the infamous 18% rates of the early 1980s, interest rates have been on a long-term downtrend and are still well below the more recent average of the last 20 years. Now please understand, I'm in no way minimizing the impact of this uptick in rates. It's real dollars, but my objective was to provide some context here. To be able to borrow hundreds of thousands of dollars for 30 years at a rate of 4.25 or 4.5% to purchase an appreciating asset is still an incredibly attractive opportunity and a powerful wealth building tool. If you have any comments or questions, or if you remember double-digit interest rates, please post below. Thanks, and we'll see you next week.